This is Business Incorporated on Channels Television. Thank you for joining us. I'm Chimezi Obi Iwago. On the show today, IMF says Egypt can draw final $2 billion from $12 billion loan program. Moody's has called South Africa's Eskom bailout plan credit negative. Plus, Zimbabwe's central bank eases forex rules for fuel and chrome miners. Let's get the show started now with the markets. And here on the African continent, only the market in South Africa was up at intraday. The Jersey index in South Africa gained 0.67%. The EGX 30 in Egypt was down 0.67%. Kenya closed positive on Wednesday. And markets in the Gulf region were mixed at intraday, with the Qatar's index up the most by 0.77%, with market heavyweight industries Qatar rising 1.5%. Abu Dhabi's index was also up 0.57%. Meanwhile, in Dubai, the index shared 0.18%, while Saudi's index lost 0.02% at intraday. And in Europe, stocks were higher this morning after soft economic data bolstered expectations of a rate cut from the European Central Bank. While some market participants expect policymakers at the Central Bank to cut rates by 0.1%, while traditional ECB watchers tend to believe it is more likely the bank will promise to ease monetary policy over the coming months instead. Well, let's hear from Chelsea what Mario Draghi and his team had to say. Hello, Chelsea. Well, the ECB President Mario Draghi is about now briefing the press. What has he said, and are the markets reacting already?
Well, we just got the ECB decision about an hour ago, and what the ECB said is that they're not cutting rates today. There had been some expectation that they would sort of move aggressively and cut rates today. They didn't do that, but what they did say was that they expect rates to go down through the next year. So they sort of opened the door for a rate cut later this year, and they also said that they were going to consider restarting this bond buying program that they had phased out last December. And they said a few other things. They're going to consider a new deposit system to sort of help cushion the blow for banks. But what this really does is it sends a signal to the market that says, you know, we're going to be easing policy. And if you look behind me, you can see the stock index is really taken off. So that's the DAX, the German stock index. It's up a lot. The euro has fallen a little bit, but really the most interesting reaction is coming in the German government bond market. So the German bond yields are at a new record low. They're actually trading below the European Central Bank's deposit rate. So they're down at about 0.45% right now. So the markets are definitely taking this as a dovish sign from the ECB.
Well, while the market is digesting Mario Draghi's speech, in corporate news, Nissan says it will cut 12,500 jobs after posting a sharp decline in profit in its latest quarter result. Is this another warning sign for the global auto market?
It definitely is adding to some of these concerns we've seen raised by other automakers over the past few weeks. So Nissan has been having some difficulties for a while. One of those problems has been the fallout from the arrest of its chief executive, Carlos Ghosn, in Japan last year. So that's definitely raised some concern among investors, but it's also just dealing with this broad-based slowdown in the global car market. So Nissan, and making this announcement, it also said that it was going to be cutting back production globally. It said it saw a sales decrease in Europe and Japan and the United States. So it's really struggling around the world. And we've seen this sort of we've seen the same sort of language from other car makers who have been reporting earnings. So Daimler, the maker of Mercedes-Benz, it had a really bad quarter. We've seen this sort of broad-based decline in the global car market. One outlier has been VW, which actually reported earnings that were pretty good. But you know, there are a lot of concerns about the trade slowdown and all of that, and it's definitely weighing on the car makers here.
In another corporate news, Facebook was fined $5 billion yesterday by the U.S. Federal Trade Commission, yet its stock rose. What's going on with the stock?
So the reaction among investors was a little bit counterintuitive. Facebook got slapped with this $5 billion fine. It's the largest fine that the FTC has ever handed down to a company. They have to sort of readjust their privacy policies going forward. And yet the stock was up about 3%. And I think what this really illustrates is just how resilient Facebook's business has been to all of these privacy scandals. So they also reported earnings yesterday. Revenue was up about 30%, which is they've pretty much regularly posted earnings growth, revenue growth in that line. So I think even though Facebook is now facing sort of an unprecedented regulatory reaction. So they also announced this week that the Justice Department is investigating them for antitrust or for competition violations. They're facing a different FTC investigation. So there's a lot of different regulatory agencies looking at how Facebook uses its data. But for investors, they're really focusing on, the bottom line growth, the top line growth, the fact that Facebook is still adding users, that they're still seeing a lot of growth in their advertising business. And you can see it in the stock price. It's up about 50% this year.
Well, Chelsea, I guess the market still has time to digest Mario Draghi's speech throughout today. So hopefully we'll still talk more about that tomorrow, and of course all the other earnings coming through. Thank you for all your time. And in the UK, the new Prime Minister, Boris Johnson, is due to make a statement to the House of Commons, having addressed his new cabinet ministers for the first time. Boris Johnson told the cabinet they had a momentous task ahead as he repeated his commitment for the UK to leave the EU on the 31st of October. Well, Juliana Olayinka has her ears on that story and joins us now to give us an update. Good afternoon, Juliana.
Good afternoon, Chimi. Nice to see you.
Nice to see you. Well, Boris Johnson quickly formed his new team with Brexit deadline fast approaching. He is to address the House of Commons later today. How are the markets reading his choice of cabinet, and what is he expected to say again at the House of Commons?
Well, it's been an interesting day in Britain so far. Not only is it simmering hot, it's also simmering hot in the House of Commons, where Boris Johnson has just been wrapping up his address to lawmakers. I must say, Chimmy, it was a very raucous occasion. The House Speaker actually had to interject once or twice to tell people to respect Boris Johnson and give him a chance to deliver his address. And he made it pretty clear. He said that we will be leaving the European Union, deal or no deal, on October the 31st. He said that the 3.9 billion withdrawal agreement that he's supposed to be paying the EU, that he simply wouldn't be paying it, and he would be using it alongside his Chancellor of the Exchequer, Sajid Javid, to prepare for Britain to crash out of the EU. He also said that he thinks under his new government, his new cabinet, which is full of a lot of hard-line Brexiteers, that they will give back Britain their glory days, the glory days of old, where Britain will become the most prosperous and central location in the world. Very interesting. I'm sure there'll be reactions throughout the day of what people think of what he said. But the SNP leader, who I must say has just been speaking, and she said that it's very likely that Boris Johnson will not be the leader of the United Kingdom, so there could be a lot of breakaways, but I'm sure we'll be discussing that later. Let's look at the markets. The markets are pretty much a will he, won't he? They haven't reacted that much at intraday. The FTSE All-Share is up 0.10%, the FTSE 100 is up 0.09%, and the FTSE 250 also up at 0.24% in currencies. The British pound is doing quite well on the dollar at the moment, up 0.12%, up on the euro by 0.10%, and just down on the Japanese yen by 0.01%.
Well, I guess Boris Johnson means business. Let's watch and see what happens eventually. Anyway, it's earnings season, and Metro Bank published its results yesterday after the market closed. How's the shares doing, today?
Not a great day for Metro Bank. Metro Bank, I must say, is the newest retail bank that we have on the British high streets. We haven't had one open in more than 100 years, so they have struggled over the years, but particularly at the moment. As soon as they released their figures yesterday after the FTSE closed, their shares plunged 18%. Why? Because their profits plunged 84%. And this is because there was a leaked document in January that showed they really hadn't analysed the risk of giving out more than £1 billion worth of loans. As soon as the newspapers and the tabloids and their customers picked up on this, they started withdrawing their money at an alarming rate. They've had over £2 billion worth of withdrawals, and that's really capitalized and criticized, and it's completely paralyzed the bank. And so they're in lots of trouble. Their chairman, their founder, Vernon Hill, he's expected to stand down at the end of the day. And a lot of people are asking whether or not Metro Bank can actually survive. They were in a couple of troubles a couple of months ago, and they did manage to raise a survival amount of over £300 million. So we'll definitely have to wait and see. But considering how much the financial markets are struggling because of this potential no-deal Brexit, the markets are keeping an eye on just how well Metro Bank can survive.
Another corporate news out there, O2 has announced plans to turn out its 5G mobile network in the UK in October. Now, is this a welcome news for you folks, irrespective of what the political space presents?
This is absolutely going to be a game changer, so much so that Boris Johnson actually spoke about 5G during his comments speech today. But yes, O2 have announced that in November they will start rolling out 5G across certain places. It will be available in entertainment and sports arenas. It will also be available in key cities. They haven't necessarily said how much it will cost. We're expecting it to be very expensive. Why? Because your internet speed is expected to be 20 times faster. What is that in reality? Well, if you've got a HD movie, you could download it in less than 30 seconds. That's just how much and how quick 5G is. So we're really excited to have that in London. It should also be available underground in tube stations. So we're very, very excited. Although I must say there are certain areas around the UK that are called not spots. So they don't necessarily get good connectivity. So the fact that the O2 have said they're only going to be releasing it in 5 locations is some concern, but at least some of us who are lucky to live in London will be able to try it if, of course, you're an O2 customer.
Anyway, I think Boris Johnson is the man to watch in the next couple of days. Let's keep an eye on those political developing stories there. Thank you for those updates, Juliana.
Thank you, Chimmy.
And in Asia, most stock market there closed higher today as semiconductor stocks in Japan and South Korea rose. Mainland Chinese stocks saw gains on the day. The Shanghai Composite added 0.48% and the Shenzhen Composite gained 0.629%. Hong Kong's Hang Seng Index gained 0.25% to end its trading day at 28,594 points. Meanwhile, the Nikkei 225 in Japan rose 0.22%. The Topix Index gained 0.18%. Australia's ASX 200 closed 0.61%. In South Korea, however, the Kospi slipped 0.38% to close at 2,074 points. And in the U.S., stock index futures were mixed in the morning as investors gear up for a busy day of earnings. At around 5 a.m. Eastern Time, Dow futures pointed to a gain of 26 points at the open, while the S&P 500 and NASDAQ looked set to slide. Investors continue to monitor trade developments with U.S. and Chinese negotiators set to meet next week. NASDAQ stocks will be in focus today after the Justice Department announced a board antitrust review of big tech companies, while Google's parent Alphabet and Amazon are due to report earnings after the bell. And away from the equities market, by 2035, China and India would have beaten the United States as the world's centers of technology innovation, while the world will be reaching the point of no return on climate change. These are some of the new findings of Bloomberg's New Economy Global Survey released on Wednesday. The new survey shows that emerging economies are more optimistic than developed markets about the power of technology to shape a better world by the year 2035. Meanwhile, there is a building consensus that in 2035, Cash will not be used as a medium of exchange, and lifelong learning can mitigate the threat that artificial intelligence will destroy manual jobs. The 2019 New Economy Forum will be held in Beijing on November the 20th to 22nd on the shores of Yangtze Lake. We'll take a break now. When we come back, we'll look at the domestic commodities market, of course, an update from the equities market as well as other stories on the wires. Just stay with us.